What's the hardest part of making money in trading? It's not finding the perfect strategy. It's not learning how to read price action. It's not discovering some secret indicator that nobody else knows about. The hardest part of trading is learning how to do nothing. And I don't mean being lazy. I mean having the discipline to sit there, watch the market move, and not touch it even when every part of you wants to press the button. Most traders don't fail because they're unintelligent. They fail because they can't tolerate stillness. They equate activity with progress. If they're not in a trade, they feel behind. If they're not clicking something, they feel unproductive. If they're not constantly engaged with the chart, they feel like they're missing out. But the market doesn't reward activity. It rewards selectivity. And that's where almost everyone breaks. The uncomfortable truth about profitable trading is that it's boring most of the time. If your heart is racing every single day, if you're constantly jumping in and out of positions, if every candle feels urgent, you're probably gambling more than you're trading. Real trading feels calm. You mark your levels, you wait, you let price come to you, and you execute only when your criteria are met. Then you wait again. There's no constant adrenaline in that, and that's exactly why most people struggle with it. We live in a world built on instant gratification. Everything is immediate. Food arrives in minutes. Messages get answered in seconds. Entertainment is endless. Trading doesn't work that way. The market doesn't move because you're bored. It doesn't move because you want income this week. It moves when conditions align, and sometimes that alignment takes time. Your job is not to force opportunity. Your job is to wait for your edge. Think about a professional hunter. He doesn't sprint through the forest chasing every sound. He studies patterns. He understands behavior. He waits for high probability. When the moment finally comes, he acts decisively. Trading is the same. Your edge doesn't appear every hour. It doesn't appear because price is moving fast. It appears when specific conditions align with your plan. Most of the time, they don't. Here's where traders get trapped. Movement feels like opportunity. Every pullback looks like a setup. Every breakout feels urgent. And because they don't want to miss the move, they jump in early or without confirmation. When the trade fails, it becomes emotional. Now, it's not just about the chart. It's about getting money back. It's about proving something. And that's where discipline disappears. Overtrading isn't usually a strategy problem. It's a discomfort problem. It comes from being uncomfortable with silence, uncomfortable with watching price move without you, uncomfortable with waiting. So traders force certainty by forcing trades, and forced trades are expensive. There was a point in my own journey where I believed that being active meant being serious. I thought that if I took enough trades, the math would eventually work out in my favor. What actually happened was my standards dropped. I started taking setups that almost fit my rules. I justified entries that were close enough. I convinced myself I saw structure when it wasn't really clean. And because I was busy, I felt productive. But my account told the truth. That when I went back and reviewed my journal, something became obvious. The trades that fully met my criteria performed significantly better than the ones I forced. My A-level setups had cleaner structure, stronger risk to reward, and better consistency. The impulsive trades were draining my edge. That's when I made a decision. I would rather miss a move than take a bad one. That shift sounds simple, but it changes everything. Once you accept that you don't need every move, the pressure disappears. You stop chasing. You stop reacting. You start filtering. And filtering is where real profitability lives. Most traders don't have a trading problem. They have a filtering problem. They haven't defined their edge clearly enough. They haven't tested it deeply enough. So when price starts moving, they hesitate. They override rules. They abandon structure. If you don't trust your system, you won't wait for it. And if you won't wait for it, you'll constantly interfere with it. Patience requires confidence, and confidence requires evidence. That's where backtesting and journaling become powerful. You need data. You need to see your system perform across hundreds of examples. You need to understand your average win, your average loss, your drawdowns, and your win rate. When you know your numbers, losses stop feeling like personal failures. They become part of the statistical distribution. Most profitability often comes from a small cluster of high-quality trades. A handful of strong setups can carry an entire month. When you overtrade, you dilute those setups with noise. When you stay selective, you protect your edge. Fewer trades don't mean less opportunity. They mean higher standards. The market will always provide movement, but movement is not the same as opportunity. Opportunity is movement that aligns with your plan. That requires predefined conditions. If your rules say you need confirmation, wait for confirmation. If your rules say you need a pullback into a level, wait for the pullback. If your rules say avoid certain sessions or time windows, respect that. Your rules are there to protect you from your impulses. The biggest threat to your account is rarely the market itself. It's your inability to control the urge to act, the urge to click, the urge to chase, the urge to make something happen. If you can't control those impulses, no strategy will save you. Trading success is not about doing more. It's about doing less, but doing it correctly. There will be days when you take 0 trades. That's not wasted time. That's discipline in action. There will be moves you miss because they didn't meet your criteria. That's not failure. That's filtering. There will be slow periods where your system produces nothing. That's not stagnation. That's part of the cycle. The traders who survive and compound over years are not the most aggressive. They're the most controlled. They understand that capital preservation is growth. They understand that patience compounds just like returns do. If you can master the space between trades, at the waiting, the quiet, the boredom, you gain an advantage most people never develop. Because the majority of traders cannot tolerate inactivity. They need stimulation. And the market will gladly take their money in exchange for it. If you want to separate yourself, start here. Redefine productivity. Productivity in trading is not measured by how many trades you take. It's measured by the quality of your decisions. Sometimes the highest quality decision is no decision at all. That's the skill nobody wants to master. And it might be the one that changes everything. Because waiting sounds simple in theory. In practice, it's war. The moment you commit to being patient, your emotions start testing you. Fear, greed, doubt, FOMO. They don't disappear just because you understand discipline. They get louder. Let's start with FOMO because it's probably the most destructive force in trading. You'll be following your plan. You'll be waiting for your level, and suddenly price explodes without you. A breakout runs 100 points. A stock squeezes. Crypto goes vertical. And your brain immediately says, you should have been in that. Here's what most traders don't realize. FOMO isn't about missing money. It's about ego. It's about not wanting to feel left behind. It's about watching other people post wins and feeling like you're the only one not participating. But a missed trade costs you nothing. A forced trade costs you capital. There will always be another move. The market will open tomorrow. It will open next week. It will open next year. But your account balance is finite. Protecting that balance is your first responsibility. You don't get paid for catching every move. You get paid for executing your edge consistently over time. One of the biggest mindset shifts you can make is celebrating discipline instead of outcome. If you followed your rules and didn't take a trade because it didn't meet your criteria, that's a win, even if price runs afterward. If you waited and stayed patient, that's a win. If you controlled your impulse to chase, that's a win. Outcomes are short-term. Discipline is long-term. Now let's talk about external opinions. Social media has made trading psychologically harder than ever. You can be fully confident in your setup, and then one tweet shakes you. Someone with 100,000 followers posts the opposite bias. Suddenly, you're questioning your analysis. But here's the reality. They don't know your system. They don't know your risk tolerance. They don't know your time frame. They don't know your backtesting data. Their opinion is built on their framework, not yours. If you constantly allow outside voices to override your process, you'll never develop conviction. And conviction is what allows you to hold trades through normal volatility. Without conviction, you'll cut winners early and let losers run because you're reacting emotionally instead of strategically. Confidence doesn't come from hype, it comes from proof. The only way to build unshakable confidence is through data. You need to backtest your edge thoroughly. You need to journal every trade. You need to know your win rate, your average reward to risk, your drawdown cycles. When you've seen your system play out hundreds of times, one losing streak doesn't shake you. You've already seen it in the data. This is where most traders skip the work. They want results without evidence. They want conviction without testing, and then when normal variance hits, they abandon the strategy and look for something new. That cycle keeps them stuck for years. The goal is not to avoid losses. The goal is to make losses predictable. When you know that your system historically produces 5 or 6 losing trades in a row occasionally, you don't panic when it happens. You don't assume you're broken. You don't size up to recover. You simply continue executing. That's emotional maturity. Another powerful tool is creating psychological rules, not just technical rules. For example, after 2 losses in a row, you step away. After 3 wins in a row, you reduce risk on the next trade. If you feel unusually impulsive or frustrated, you don't trade that session. These rules protect you from emotional extremes. Because here's something subtle but important. Both losing streaks and winning streaks can destroy discipline. After losses, traders want revenge. After wins, they feel invincible. Both states distort judgment. Unstructured psychological rules keep you stable. Routine also matters more than people think. When trading becomes chaotic, your emotions follow. Establishing a consistent routine reduces decision fatigue. Wake up at the same time. Review your plan before the session, mark your levels, set alerts, walk away, check back at predefined times, journal afterward. When your process is structured, you reduce impulsive behavior. Trading should not consume your identity. The more your self-worth is tied to daily P&L, the harder patience becomes. If trading is your entire emotional world, every tick feels personal. When you maintain balance or health, relationships, other interests, trading becomes one component of your life, not the definition of it. And that reduces pressure. Let's talk about compounding, because this is where patience becomes powerful. Most people enter trading trying to make huge returns quickly. They focus on explosive growth. But consistent growth over time is what builds real wealth. If you can average even a few percent per month while managing risk properly, that compounds dramatically over years. The key word is years, not weeks, not months, years. But compounding only works if you survive. And survival requires discipline. The impatient trader chases big months and suffers big drawdowns. The patient trader focuses on protecting downside and allowing steady upside to accumulate. One is volatile and emotional. The other is controlled and sustainable. Trading is not about proving how smart you are. It's about building a repeatable process. It's about trusting that process enough to wait for it. It's about accepting boredom as part of professionalism. The real edge isn't in your chart template. It's in your behavior. It's in your ability to sit through slow markets without forcing trades. It's in your willingness to miss moves without spiraling. It's in your commitment to follow rules even when you feel tempted to break them. If you can master waiting, control FOMO, filter out external noise, rely on data for confidence, and build psychological guardrails around your behavior, you separate yourself from the majority of traders. Because most traders don't lose due to lack of intelligence. They lose due to lack of control. The market doesn't reward intensity. It rewards consistency. It doesn't reward ego. It rewards discipline. It doesn't reward speed. It rewards precision. So here's the final shift I want you to internalize. Your job as a trader is not to predict every move. Your job is to execute your edge flawlessly and repeatedly over time. Nothing more, nothing less. Sometimes that means taking a trade. Often it means waiting. Always it means protecting capital. When you can genuinely find satisfaction in discipline instead of action, when you can sit comfortably in the quiet space between setups, you stop fighting the market. You start aligning with it. And that's when trading changes. Not because you found a new indicator, not because you discovered a secret strategy, but because you mastered yourself. The market rewards patience. It rewards structure. It rewards those who can wait. Be one of them.